Get ready for Season 3 of the Tron Grand Hackathon 2022 with a total of $1.2 million in prizes across Web3, DeFi, GameFi, NFTs, and the newly added Academy and Ecosystem tracks. The wait is over. Tron Grand Hackathon presented by TronDAO. To learn more, visit trondao.org. All opinions expressed by hosts and podcast guests are solely their own opinions and not necessarily those of the blocks. Podcast guests may have taken positions in the assets or other matters discussed in this podcast. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions. For full terms, visit theblockcrypto.com/terms-service. Ladies and gentlemen, welcome to The Scoop. I'm your host, Frank Chaparro, editor-at-large at The Block, and we are on site at Converge. And today, joining us on the other side of the mic from Miami, Florida, one Mr. Nic Carter of Castle Island Ventures. Sir, thanks so much.
Hello, Frank. Thank you for finally including me on your podcast.
Absolutely. It's been a long time coming. I feel like I've known of your existence for almost 25% of my life, which is pretty wild if you contextualize it like that.
That sounds about right. Yeah, I mean, you wrote a story about us when we were at Fidelity, and I felt very hard done by. But then, out of that, a beautiful friendship blossomed over the years.
We reconciled our differences. So let's maybe go through that journey. You were one of the first crypto enthusiasts at Fidelity, or at least one of the first sort of people working in that part of the firm.
Yeah, I was sort of one of the first dedicated crypto staff there as they were standing up a fund internally. Certainly not the first crypto enthusiast. There were a few once I got there. That was why I joined, because I was kind of doing a little survey of TradFi and wanted to work on behalf of crypto or in crypto. And there wasn't really much of an industry at that point. And Fidelity was by far the most pro-Bitcoin, pro-crypto organization out there.
Well, Abigail Johnson, I think, was one of the first to come out and say she supported crypto. At the same time, other CEOs were talking about how it was rat poison squared. And
Consensus 2017, I think, she gave a speech. They started mining in 2014 and did a bunch of experiments.
And then you found or convinced Matt to start your own fund?
No,
Who did the convincing?
Matt convinced me.
Yeah.
I wanted to stay.
And so what's that journey been like?
Well, I felt disloyal, frankly, leaving Fidelity. I wanted to help them build the franchise there. But of course, it's much easier to operate independently, much harder in many ways. But
fate had other things in store for you.
Yeah, and now we're on our third fund. It's been 4 years of Castle Island. And made a lot of mistakes, of course. A lot of things I got wrong, but glad we did it. And finally feel like we have exit velocity. We have momentum as a firm. We're growing.
One thing that stood out for me in a previous conversation we had was an aspect of your original thesis that you said you think is wrong, which is that the regulation or the regulators did not crack down on the space, DeFi specifically, to the extent you were maybe anticipating. I wonder if now, this conversation we had was maybe a year and a half ago, a year ago. Do you think that might be different now, given everything that's happened with Terra Luna and everything that's happened with rugs, technical hacks? Maybe you were right.
No, I mean, being wrong about timing is the same thing as being wrong, So let's say you're right eventually, but if you are in the asset allocation business and you're thematically right, but wrong on timing, you're just wrong. Because you've only got a window. You've one career. You're only deploying at certain times. So yeah, I thought regulators would be way more aggressive, way earlier. They weren't. They waited too long. It's very laggy. Now I think they're probably going to overcompensate and be very aggressive on the other end. Terra Luna is a massive accelerant. I mean, it's pouring jet fuel on the regulatory flame. Every regulator in the world now knows about Do Kwon and Terra. And they're going to be able to use that very effectively against the crypto industry because of the retail fallout. Because it was no matter what country you're in, you had retail investors in your country affected. The scale of the devastation was enormous. 60 billion nominal wiped out. Less, actual real wealth, but 60 billion nominal. And then, of course, the fact that it represented itself as a stable instrument. That's very bad, because if people sort of knew it was risky and unstable, that's one thing, but here it's the violation of the expectations.
Exactly.
Which is so bad, because other things were built on the premise that it was stable. These fintech apps, these savings apps, yield apps, those all collapse. And that's why it's so bad when, things that are presumed to be stable in traditional markets break, like when money market mutual funds broke the buck. That's why it's so bad, because you get this fragility that's built up under the assumption that the thing is stable. And that happened with Terra. That's going to be really tough to work through.
And people turn a blind eye to potential risks that could creep up because they assume that the system will always work as it has.
Yeah.
That's the sort of bias there.
So, yeah, I mean, fundamentally, like the struggle that's happening between regulators and crypto is, on the one hand, there's monetary repression happening out there in the real world, right? So inflation is very high. Interest rates are being held low, no matter what kind of developed country you're in. And that is necessary in order to, reset the fiscal position of all these governments. They want you to hold government debt, right? They want you to hold these negative real yield instruments so that they can reset their balance sheets. Crypto is outside of that system. It's a exit, right? Whether it's Bitcoin or stable coins, right? Or something else. So that is the struggle. They don't want you to participate in that. It's the same way in the 1930s or 40s, gold in the US was illegal, right? Because that was an alternative, right? You had to hold, banks were forced to hold lots and lots of US government debt. They wanted savers to hold the bad instrument. That's the same thing that's happening today. So that is the regulation struggle. It's not like, regulators want us to be prudent with how we allocate our money or whatever. No. The state needs a certain set of things to happen in finance, and crypto is a total alternative. And so that's the battle, right?
So what does this macro backdrop, the sort of fallout of Terra Luna, mean for the adoption and proliferation of stablecoin? What does it mean maybe for Jeremy Allaire and co?
Well, I mean, from the start, Circle USDC has positioned themselves as the more credible of the stablecoin cohort. Although, even among the sort of fiat-backed stablecoins, which is in my mind the only valid way to create a stablecoin, fully reserved, even within those, there's heterogeneity. You have different models. You have New York Trust Charter, Nevada Trust Charter. You have the onshore money transmitter licensed state by state. You have the offshore model with Tether. That covers
you
a
have
whole...
some backed by Chinese commercial paper.
Yeah, Evergrande, allegedly. And then you have different...
Alleged. No evidence.
You have different approaches to OFAC compliance. You have some would say some stablecoins are being over-compliant. And then some are onshore, but they're not proactively blacklisting OFAC addresses. Some are offshore, and they're
There's
not
an issue with
blacklisting.
nomenclature here, isn't there?
Completely. I mean, the fact that they're all called stablecoins, it smashes everything together in this single taxonomy that's super, super different.
You tried your damn hardest to get the industry to take up the mantra of crypto dollars.
I'm just one man, Frank. I can't... There's only so much I can do. I did write a paper about this. I think it was like Crypto Dollars, the story so far. But, I learned my lesson there. You can't steer... You can't steer an aircraft carrier, you know.
Can't. You can't force a mule uphill to drink water. Is that the metaphor?
Yeah, I think so.
Something like that.
That's it. Yeah.
I might have mixed up
You
that
can lead a
metaphor.
mule.
You can lead a mule to water, but you can't make it drink the water. That's what it is.
I thought it was a horse, but, it doesn't matter.
Mule just sounds more like stubborn to me.
Here's the problem with stablecoins. First of all, some of them are these crazy, insane things, and nobody should ever create like Terra and all of the and all related things. And those are inherently unstable, so that doesn't make sense. Then also, people don't like the fact that you're getting fiat currencies, which are very inflationary. I mean, is the dollar really that stable? I mean, come on. What are we, like 8% year-over-year inflation? Other fiat currencies are worse. Is it fair to call them stables? Why don't we just call them what they are? It's a dollar, for the most part, on crypto rails.
Yeah, that's an incredible point. I think the reason why we call them, I mean, inherently, any currency is not stable. The point of it is to be a medium of exchange, not to sort of never change in
Correct.
Value.
Correct.
They do change, and in some cases, like Argentina, they change quite rapidly and deteriorate very quickly.
And a central bank's mandate is not to keep the currency stable relative to purchasing power. They don't want to keep it fixed and basically sterile, right? They want it to actually match the nominal output of the nation.
But
right?
The juxtaposition of the market, of the crypto market, with what a stablecoin does makes it stable, because crypto has been so volatile that this is the stable crypto.
By virtue of that comparison.
By
sure.
virtue of that comparison. But it really, when you think of what money is, you're right. It's not meant to be stable. And the priorities of those at the helm of shaping the market, that is not a priority for them either.
And I mean, one step further, if you think about a stable coin, you're not getting any interest payments associated with it, right? So
no, that kicks up to, that's why we can have this very fancy, lovely conference.
Right, exactly.
In San Francisco.
It's the seniorage, right? So now inflation is high. Interest rates are pretty high, not as high as inflation. But, if your funds were in a bank, you'd be compensated a little bit, right? The bank would be passing some of it on. Stable coins, the beauty of them for issuers is no interest gets passed on. Should there be one where interest does get passed on? Yes, there should be. I think someone will make that.
Yeah.
I think it'll be popular. But so now there's this huge delta between inflation and interest. It's enormous. So you have to think of it as the convenience yield of holding a stable coin is you have an 8 or 9% carrying cost of holding that stable coin on the blockchain, not getting any interest payment. So that means that it's implied that you're getting 9 or 8% worth of yield in terms of having it. So maybe you think you can earn that in crypto.
Sure, but juxtaposing again with crypto, the reason why people are parking in stablecoin is because if they were leaving that to the whim of the market, it would be down 50% or 60%, or in the case of Terra Luna, 100%.
And the fact that they're holding in stablecoins as opposed to going all the way back to treasuries is telling. It means that they think there's almost 10% worth of yield in crypto to be found somewhere opportunistically within the next year.
Yeah.
So it's telling.
So how are you positioning yourself in the market right now? Are you deploying as fast as you were maybe 6 months ago? Where are the opportunities?
Oh, all across the crypto space. Yeah, I mean, we're in the fortunate position of having raised earlier this year and, having watched the carnage unfold a little bit, valuations come down, not as far as I'd like. They came down. Founder quality is up, I would say. I mean, you're only seeing, much more committed founders. The other thing is because the regulatory gauntlet is kind of closing, you're seeing founders that are willing to kind of go to the distance, and they are aware that they're doing something really difficult, so you have to be eyes wide open about that. Before, you could maybe be a little bit naive. Now, we sort of know that the CFTC is activated, the SEC is activated. It's going to be challenging. You're going to eventually have to figure out how to comply, or how to shape the rules, how to shape the regulation. And so, yeah, we're deploying it at a healthy clip, I would say. In DeFi in particular, I think DeFi has been kind of unloved in the crypto space from the venture perspective for the last year. In the, everyone hates on NFTs, actually. We're seeing in the MSM charts, NFT volumes down 98%.
Those charts are crazy.
They are. I mean, I would question the data quality, actually.
If it didn't come from coinmetrics.io.
Typically, when you see any data-driven claim in the mainstream press regarding crypto, it's wrong. Because the data is hard.
Well, what's the expression? There are lies, damn lies, and data.
Yeah. So, I mean, with something like NFT volumes, if you're not eliminating wash trading at the peaks, that's going to make the decline look bigger.
Fair enough.
If you're not incorporating newer venues, that's one thing people fail to do all the time, is they don't realize that if you have a fixed set of sort of venues you're querying and new venues emerge and you don't include them,
it's not going to be a complete picture.
You're not capturing the churn. You're not capturing the migration from venue to venue, which happens. So,
and it happens all the time. These products are not incredibly sticky. Folks jump from one marketplace to the next depending on where they see opportunity.
So
I bet you 90%. I bet you like with almost 100% certainty that article did not or did incorporate the wash trading.
I'm sure. Yeah. So I think you guys actually, a shout out to the block. You guys have some very good data too.
Great dashboard.
Big fan of the dashboards.
We have some coin metric charts in there, I'm pretty sure.
Less than I'd like, Craig. Less than I'd like. But yeah, I mean, NFT data is hard because there's a bunch of different blockchains. There's a ton of different venues and new ones are being created all the time. And so you have to capture that. But we are active in that space, I would say, in the more sort of like real utility, real world applications of NFTs. That's very exciting to me. Now we're seeing real brands, real businesses embracing NFTs, not just the sort of trading ape images, but treating them as digital property and something that people want to own for a long period of time and have persistence. That's actually pretty exciting.
You made headlines recently for very vocally casting away the Bitcoin community to an extent, the fundamentalist.
Yeah, I mean, hopefully not the whole Bitcoin community. I think anybody that holds Bitcoin is a Bitcoiner. You know, that's my definition of Bitcoiner, which includes lots of people. The one part of the community I sort of distance myself from is the part that confuses Bitcoin with religious doctrine. You know, I think religion is religion, money is money, and they're pretty distinct, and they should stay distinct.
Do you think the reason why so many people have a religious view on Bitcoin is because many people are replacing religion with philosophy or many different types of things that we identify with?
Completely. It's a modern disease is eliminating religion and, you know, traditional values like that and trying to find secular replacements, whether it's like SoulCycle or CrossFit
or Bitcoin
or veganism or Bitcoin or environmental, you know, advocacy, you know, the fear that Mother Nature is punishing us, right? With climate change. It's all the same thing. If you eliminate, you know, the metaphysical stability that religion gives you, you're going to find you have a God-shaped hole in your life now.
Yeah. And putting aside whether or not God exists or not, I think that there is a God-like entity, but there is this innate human desire to have a thing that is metaphysical to which you are devoted.
Correct. I mean, and people want to have a calling. They want to be part of a broader mission. They want to subscribe to something. And just because they may think it's secular doesn't mean it is. And, you know, it's just people are wrong about that. And Bitcoiners, many of them actually do explicitly link religion and Bitcoin. So it's sort of they admit what they're doing. Even though Christianity, I think, has nothing really to do with money. It doesn't say much about it aside from sort of discouraging the excessive pursuit of wealth, I would say. And maybe
or being foolish about money. It does say a bit about that. It's, you know.
But, you know, many Bitcoiners, they talk about Bitcoin in this, like, you know, ecumenical, liturgical manner and don't realize what they're doing. And, you know, I think it's perfectly fine to distinguish the two and admit that, yes, it's important and money can have moral dimensions, but it's not religious. So that's the community I'm not a part of.
You can't take it with you.
Correct.
Get ready for Season 3 of the Tron Grand Hackathon 2022. There are a total of $1.2 million in prizes up for grabs in Web3, DeFi, GameFi, NFTs, and the newly added Academy and Ecosystem tracks. So what are you waiting for? Join Tron for an opportunity to showcase your work, win funding for your project, and network with other builders in the community. Tron Grand Hackathon, presented by TronDAO. To learn more, visit trondao.org. What do you think are the most overlooked opportunities right now in the market?
Good question. So there's a few things that have changed in the last year. Like maybe 12 months ago, I would have said sort of Bitcoin-related startups, or because that was kind of a overlooked space for a long time. Mm-hmm. But actually, there's a whole bunch of Bitcoin-focused funds that exist today. There's probably about a half dozen. There's good amounts of capital supporting Bitcoin-only businesses, Lightning businesses. And so that arbitrage has been closed to a certain degree. I would have also said, pertinent to where we are here today, businesses focus on crypto dollarization, giving access to focusing on the global audience, including emerging markets, giving them access to crypto dollars and letting people escape their local currencies. So really high quality wallet experiences built for the global south, let's say. That has also begun to close. Like we're also seeing really high quality startups in that sector too. It's easier to identify places where there's an overabundance of investment. One sector I really like is the under collateralized lending space. So basically real world lending on blockchain rails. So not the sort of over collateralized lending that you see, which was the bread and butter of DeFi, but the under collateralized, which is basically real credit creation. It just so happens to be happening on DeFi, on blockchains. That's very interesting to me because that is going to be the way we get out of this credit crisis that we just had and move on to a more credible, transparent model of lending where the cash flows are transparent. You can see the risk in the book from a third-party perspective.
I'm glad that you brought up the credit crisis that we just went through. Do you anticipate that many of the once mighty lending firms, I won't necessarily name names as a courtesy to you, but do you think that they will transition to a more blockchain-based model?
I think the ones that succeed will. I mean, typically it's not that incumbents are able to pivot. It's that new insurgent firms demonstrate new ideas, right? So that's the innovator's dilemma.
That's what's so unique about the crypto market. Even a company like Circle had its difficult times and now is just a behemoth worth, I think, $7 billion or so.
I remember the Circle when Circle was a Bitcoin company.
Of
you
course,
remember?
Yeah. That was a bit before my time, but I am aware of it.
I mean, in some
it was
sense,
like a retail, sending Bitcoin around the world type of firm.
And for a long time, I thought to myself, wow, so Circle, I think there was an issue with banking. Circle didn't get access to banking and Coinbase did at around the same time, I think because of who their backers were. And then I was always so wistful about that. I was like, Circle could have been Coinbase. But, it's incredible now. After a long time in the wilderness, Circle came all the way around. They issued the biggest stablecoin, the biggest credible stablecoin, and they're doing incredibly well. Coinbase went public struggling a bit. Circle could well surpass them all these years later.
Yeah.
It's an incredible journey to have witnessed.
And we may see a similar story arc with some of the firms that have been not obliterated, but just completely, hit by this crisis.
Yeah. But to your question before, I do think that if you are a forward-looking and you are a smart lender in the crypto space, you are going to look to move to a hybridized structure where, sure, you have a centralized element to your business. You rely on legal contracts for a lot of it, but also you benefit from putting a lot of your cash flows and your activity on chain because regulators will reward you for that because you're engaging in real-time disclosures. your clients will reward you for that, because now they can look at a dashboard that queries the blockchain to see the risk, as opposed to blindly trusting you, right?
There was a lot of blind trust,
Too much.
ironically,
Too much.
in a space that is meant to be trustless.
Yeah, that irony has been really browbeaten into us by
By the media.
the critics. Yeah.
But there is some truth to that. There is definitely some irony to that.
Oh, yeah. But it's our job now to sort of like pick up the pieces and instead of waiting for regulators to insist we do things a certain way, just be proactive and be more transparent as an industry. And you could say this is about the sort of token sector as well, like about their transparency. Like, yeah, the SEC will eventually ask tokens to do disclosures. Why don't we do it ahead of them asking?
Yeah.
Right? So I would say for both the credit sector and the token sector, it's obvious what the sort of final outcomes are going to be here. The industry is going to have to meet the regulators in the middle, and they're going to have to be far more transparent about what they're doing. I know people like to say the blockchain is very transparent. It has theoretical transparency, but not practical transparency.
Yes.
It's very hard to query data from there. Nobody does it well, and the firms that are ought to be using it for transparency's sake are not very proactive in terms of building analytics dashboards and things like that. And so it's all well and good to trumpet that and be like, yeah, DeFi is the most transparent form of financial innovation that's ever existed. But in practice, if only a tiny minority of people with access, and the ability and the means to query that data and understand it, then it's not really transparent.
Who does the job of querying that information in a world where we have to do disclosures for various blockchains? Who's doing that work? Is it the foundation? Is it the larger investors? Or is it the exchanges?
The challenge should be to narrow informational asymmetries. So insiders naturally have a privileged access to information. Their objective should be to narrow that gap as much as possible, such that any random outsider could come in and understand key features of these systems without having inside access. So if it's a token project or something that has cash flows on chain, they should be trying to surface all relevant possible information in a Dune dashboard or something, or their own analytics dashboard, right? Such that anybody could go verify everything down to the transactional level. That should be total possible. And, so like Capital IQ, we have in TradFi, you look at the aggregates and then you can drill down back to the individual quarterly report where that, data point comes from. We should be able to do the same in crypto. We should be able to look at an aggregate, disclosure regarding revenue or cash flows for a protocol. You should be able to drill down into the individual specific transaction, which it references. So that basically doesn't exist today. That's where we should be going.
We should build that.
It's hard.
That'd be a big moneymaker. You're a prolific podcaster. This is actually in the script. I haven't said it. And the host of On the Brink. Have you ever had a guest that just completely blew you away?
Yeah. I mean, we've done 350 episodes. I edited most of them.
You should do one of those threads where it's like, I've interviewed 350 of the most interesting people in the world, and this is what I've learned.
About it. Here's my book. Here's what I learned. Grinders get up at 6 a.m. and they drink one green smoothie. Who have been some of the best guests? My goodness. I have some guests that I feel very lucky to have interviewed. George Selgin, one of my heroes. One of the most balanced academics. Larry White, also adjacent to George Selgin. The free banking patriarchs, the patriarchs of the free banking literature, which I think crypto people should know more about. I've had some guests on the energy front that have blown my mind. I mean, when I've dove into the energy space through the intersection with Bitcoin mining, and I talk to subject matter experts that spend their whole careers thinking about how electrons get from the generation plant through the wires, to the end user. The complexity there is beyond anything I've seen in crypto. It's actually a deeper rabbit hole than crypto. So I've been very impressed by some of the folks in that side. I find it very interesting. That's why I'm still spending so much time on Bitcoin mining, even though the sector is in disarray, is because it's actually a window into what
Energy.
the transition that's happening in the power space in the US, which is fascinating. It's a huge transition.
And somehow Bitcoin mining is playing a key part of that.
It's definitely a way to learn about the really rapid changes, the influence of legislation on the energy sector. This Inflation Reduction Act is very important in terms of the renewable transition in the US. I don't know, we might have overstated as Bitcoiners the role that Bitcoin is playing in the energy transition in the US, but it definitely is a way to learn about it really quickly. If you want to understand Bitcoin mining, you just have to understand how power is generated.
So you've enjoyed the free banking episodes and the energy mining related episodes.
Yeah, those are just two endlessly interesting subjects for me.
Yeah. So we'll have to check that out. Well, listen to those episodes, folks, to learn more about those subjects. Nic Carter, thanks so much for joining us on the show.
Thank you.
It's been a pleasure. Once again, we've been joined by our guest, Nic Carter, partner at Castle Island Ventures. Where can our listeners learn more about you and what you're doing?
So I used to post on Twitter. I don't anymore.
That's right.
I don't post on Twitter anymore.
Have you, when was the last time you tweeted?
Well, I've been retweeting some stuff here and there when I'm contractually obliged to.
Fair enough.
But I don't know, like probably since June, really.
And do you feel freed from the shackles that is the slings and arrows of crypto Twitter?
Well, it's that whenever you are active on Twitter, and I'm sure you feel this, you experience audience capture, right? So you're always fighting your own personal battle against the algorithm's attempt to enslave you, right? The algorithm wants you to tweet just the exact things that get maximum attention, and that creates a change in your brain. You get trained like a rat getting a little dopamine hit or whatever. You get trained to tweet just things that are maximum clout and attention to your own intellectual detriment. Everybody's fighting that same fight, and I feel freed from that. Which is great. I think I can be more intellectually honest and more curious about things. I recommend everybody gets soft canceled. That's my recommendation. It's good for you.
Because then you will go through this sort of intellectual reawakening process.
Correct. So the place to find my aggregated work is niccarter.info. That's the repository of everything. More coming soon.
More coming soon. Thank you so much for being on the show.
Appreciate it.
The Scoop will be back for you again with another great guest. Have an awesome day. Looking for more great insights from The Block? Check out The Block Research, the premier platform for research content on crypto markets and the digital asset industry. The Block Research membership includes cutting-edge reports, webinars, company maps, and more, available via our dedicated research portal. Visit theblockresearch.com to find out how to join today, or contact a member of our sales team at sales@theblockcrypto.com and let them know that Frank sent you.